Hello, everybody. Welcome to the webinar. We'll be getting started here in just a moment. As we get going, I just want to do a quick systems check. Give me an OK in the chat box if you're hearing me clearly and seeing my screen OK. Okay, just waiting on a few more responses to make sure everybody's up and running. Give me an OK in the chat box if you're hearing me clearly and seeing the screen all right. All right, looks like we're up and running. If anyone runs into any issues, just let me know. I've got my eye on the chat box as we're going along. Obviously, we're focusing on technical analysis today, but we'll take a look, as is par for the course, what's going on fundamentally as well to help maybe guide as to preference of direction with moves, which is helpful, but not always necessary. Keep in mind, as we go forward, obviously all investments have risk. This holds true with trading in Forex, spread betting, options trading. There's clearly risk involved, and you can manage your risk in different ways, what is right for you in terms of how you handle your trades. And we'll go over some ideas today in that regard of how to manage risk in different fashions. And, you know, keep in mind what we cover is not meant to be financial advisement. It's coming from an educational perspective to hopefully add to your knowledge base and help you develop or improve upon your trading strategy as you move forward. So you can read the full risk disclosure statement on avatrade.com if you have interest to do that. Now, as we get into the technical analysis, keep in mind there are a couple different ways that people go about using technical analysis. There are manual methods of technical analysis, which is what we'll lean on in today's webinar. By manual methods, I mean drawing our own lines, support, resistance lines, or we might call them price levels, drawing our own trend lines, and the like. So those manual methods allow you to understand what you're seeing on the chart, and as you're going through the mental process of finding where you think an asset might be overbought, oversold, trending, that sort of thing. The other way of using technical analysis is with indicators that kind of do the thinking for you, some better than others, and in the end tell you whether something maybe is overbought, oversold, whether it's giving you a signal to buy or sell with different graphics within the indicator. Indicators can be helpful. I've found that they're obviously less reactive to the fundamental news. They typically cannot take those into account. They're only looking at the technical analysis, and so sometimes can get stuck giving false signals in one direction, sometimes all day long. And if you're not paying attention to what's happening fundamentally and adjusting with manual methods. So I think it's best that we focus on manual methods for the most part. Indicators, I think, are good to add later to confirm what you're thinking, maybe in a direction you've already identified that you prefer. Okay, if that makes sense to you. So let's go ahead, let's jump on some charts real quick. We'll take a look at what direction are things trending. And by the way, we had a cryptocurrency webinar recently, and we were taking a look at Bitcoin and the fact it was breaking support levels. And you know, when we were doing the webinar, we saw that this support level here had broken. Okay, it had already broken, breakthrough. We showed a simple sell stop, technical analysis wise. You see support, support, support. If you had a sell stop here, pending order, as soon as it broke, it would have triggered, and look at all the profit you would have had. During the webinar, we looked and we said, another support level, support, support, support. And we said you could prepare a sell stop same way on this line. This is the line we drew during that webinar. And we said, if it breaks this support, you could likely get a breakthrough candle like this one, happen again as this support breaks. And look exactly what happened. It broke this support. Had you entered on this line, the line we said might be a logical spot for another sell stop, it breaks the support. Here's your breakthrough candle. It triggers your sell, and it continued to drop all the way down to 65.66, which was $122 down. $222 down in the price of Bitcoin. Okay, $222 from a simple sell stop right here per coin that you're holding. So, you know, had you had a one lot position, let's say, pending right here, that's 10 Bitcoins down $220 with a simple pending order, simple technical analysis strategy here with a sell stop below the support. 220 drop with 10 coins, that's $2,200 in one move. Pretty simple, right? Simple stuff. And really, that's largely technical analysis, especially with cryptocurrency. They tend to follow technical analysis strategies quite well. Not always, obviously, but many times. We saw the breakthrough here. Sell stop would have worked. We said, hey, during the webinar, look how well it would have worked there. We could set another one up. I simulated and set up a simulation one, and boom, that would have paid very well. Now let's go and maybe apply some similar strategies to some other assets. What's moving a lot lately, Nasdaq, S&P 500, Dow Jones. So let's look at some simple technical analysis stuff without looking at any fundamental news yet and see how we could have already made money today and what some potential opportunities are moving forward. Okay, so what do we call this here? When there's a space like that, what do we call that? And this was from earlier in the week, from Monday. This was Friday's close. This was Monday's open. Yeah, I drew a channel, but what's this space called between the prices? A gap. Yeah, exactly. So a lot of times when you get a gap like that through the weekend, okay, from Friday's close to Monday's open, which is exactly what this was, that gives you an idea of momentum. Okay, momentum. Now, many times the gap will fill. After it gaps, it'll pull back down sometimes to fill the gap and then make a run. Okay, this time there was so much momentum, it didn't even fill the gap before it continued in the direction of the gap. Okay, so once you identify the direction of the gap, it's a simple move to say, okay, momentum is in that direction. Then you can start drawing your buy stops. In this case, momentum was up from whatever news came over the weekend. And do you really need to know what the fundamental news was? Not really. We know it was good news for the market. That's why it gapped up. Okay, positive momentum. So once we see that this consolidated and was moving sideways, right? Sideways, sideways, sideways. And these are 1 hour candles. So it moved sideways pretty much through the daytime. You could have drawn a resistance level and said, okay, resistance, resistance, resistance. If it breaks through, I buy, right? Buy stop strategy again, pending order. When it broke the resistance, you could have gotten in. And you see how much more it climbed if you had a pending buy stop above that resistance level to enter on the breakthrough after the gap up. So you could have missed the gap rise. You could have waited and been patient until it went up further and broke the resistance, then got in, and you still would have profited from 84.64 up to 85.64 all the way up to 86.10 right now. Okay, so that's what, 50 points up on the Nasdaq? You understand that one lot position is 100 indices, right? 50 points up, that's $500 on a simple look at the gap direction, go with the momentum, and you see how it would have worked just to the middle of the week this week. And really, you could have closed at that profit level even higher. As soon as this started consolidating, this rose, it hit, you see it's forming resistance and moving sideways. You could have gotten out even at 86.22 or so at that resistance level. Okay, so momentum, direction of the gap, shows you the direction of the momentum. It doesn't always continue in the same direction, but many times it does. For the same reason it gapped in that direction, it's the same reason why many times it continues in that direction. So that's a simple technical analysis strategy. Just be careful of the pullback after the gap. Many times it pulls back down and then continues up after it refills the gap. If you notice it's not breaking below the level of the gap and continues to go, then you look through for a breakthrough on the way up. Okay? Type okay if you're with me on that. On how that was predictable Monday, that after that gap, the momentum was up. Or if you have any questions on it, please ask. Okay, so would you say, looking at this chart now on the Nasdaq, good question. Good question. Someone's saying that they see a small gap down right here, this gap. There was a strong downward punch, okay, and this was yesterday, I believe. Let's look. That was, no, that was, yeah, this was yesterday. Yesterday morning, it gapped down, okay? And so what we see, when you see a little bit of a gap down, and that's not even through the weekend, something happened during the day at that time. A news article came out, maybe something about tension between US, China. I don't know what it was at that moment. It's not a very big gap, but it was a small one. Maybe there was an economic announcement. Something caused this to jump a little bit. But you see it recovered, but would you say the upward momentum has stalled? Look at the technical analysis. Let's get rid of all the lines I drew. I'll delete all my lines so I don't influence your decision here. Has the upward momentum stalled? And let me draw one line. That would be resistance, right? Resistance, resistance, a little downward gap, resistance at the same spot, and consolidation. So, yeah, obviously the upward momentum has stalled, okay? And so right now we're in a situation where we say it's not trending one direction or the other. The market is moving sideways on the Nasdaq. So the question is, how do I know which way to trade? How do I know what to do? Technical analysis wise, you don't necessarily have to guess. What's an option here if you're not sure which way this might break? What could we do? Two possible trades we could set up at the same time without having to try and guess which way we think it'll break. What two trades can we set up technical analysis wise here that would make sense? Because we've got a support level right here. Support, 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 support. Resistance here, resistance, resistance. It's ranging between a tight window. What can we do? Farhana, good. You're saying wait for it to break either the support or the resistance. So you could put a sell stop order down here, right? A sell stop that activates if it breaks the support. Somewhere down here, you could have an entry point into a sell stop. Entry point somewhere down here. If it breaks the support and comes down, boom, you get in on a sell. With your stop loss then back above the support somewhere, okay? The other option is if it breaks the resistance by enough that you deem significant, you could get in on a buy stop from somewhere up here to buy. So you could prepare two pending orders, buy stop up here, sell stop down here, and just wait for the big news to hit, whatever that news might be. Because can we predict what breaking article might occur today? No, we don't know for sure. Could be something about the impeachment of President Trump in the U.S., which it looks like probably today's the vote. He'll be impeached. I don't think that's going to shake the market. The Senate is not going to confirm it. They're going to throw it out almost immediately, and Trump will stay in office. That's what's expected. So I don't think the impeachment will be what would make the markets break through. But something could break about U.S.-China. at any point, right? So, or some other breaking story, whatever it might be, if it breaks this support, you likely could see as rapid as this climbed up to the support, you could see just as rapid of a drop back down to where the gap opened on Monday. You could easily see that happen. So confirmation of a downtrend would be broken support. So that's where technical analysis wise, it makes sense to have your sell stop activated down here somewhere. Same with the buy stop, confirmation of an uptrend is if it breaks to a higher high point through the resistance, and that might be enough for you to say, boom, trigger a buy position. All right. So sell stop sells from a lower point, buy stop buys from a higher point. To set those up, very simple. You go to the order window, change it from market to pending, and you've got 4 types of pending orders. The stop orders are the ones we were just talking about, buy stop and sell stop. Okay. If any questions on that, please let me know. Farhan, good question. How soon should you enter below the broken support? You want to give enough distance that you feel it's not a false signal, right? And then same thing, you not only want this far enough below the support that you believe, this is a real movement, right? You also want your stop loss, if you use one, high enough back above this broken support that if it triggers your sell stop and then temporarily spikes up and then goes down, you don't have your stop loss too close if you're using a stop loss, right? So I always, as a rule of thumb, and this doesn't have to be your rule, if I'm using a stop loss, and I don't always use a stop loss, but if I'm using one, and when I say I don't always use a stop loss, sometimes I use a hedge trade setup, okay? But if I'm using a stop loss, let's say it breaks the support, I have my entry price far enough below that I think it won't just be a false signal. It enters, let's say my sell stop activates, I've got my sell position running, and then it kicks back up here for a second before dropping. I typically will put my stop loss above the next resistance level. So if this is the first resistance level, the next one is right here, right? So my stop loss would be up here above 1, 2 resistance levels. Then once the trade opens, it really takes a true reversal to get to your stop loss, okay? That's just a suggestion to use 2 levels of resistance. If this broke the support, that's resistance 1, that's resistance 2, then your stop loss. Then it would have to be a real significant reversal to get to give up on the sell position. Now, how do you accomplish widening the strike zone like that on your stop loss without risking more money? Take a smaller trade, right? If I was going to put my stop loss here with this activation point, and let's say I was going to trade half a lot, and my stop loss was going to be here, if I say, I want to put my stop loss above the next resistance level to avoid any false signal that might come up before it drops. So then if my stop loss is twice the distance away, then instead of taking half a lot, I might take a position quarter of a lot. So then I'm still risking the same amount, but my position is more patient with a wider strike zone to my stop loss, a more patient distance to my stop loss, still risking the same amount that I wanted to risk, just by taking a smaller trade size. And thereby you can be more patient with the move, and many times things work out better for you in the end that way. Mike, you're asking about the idea of a hedge trade. And since I mentioned it and you're asking, let's go over the concept. Let's say you believe in the bigger picture. And I'm not telling you you should believe this, but let's hypothetically say, Mike, and anybody else, if you believe the Nasdaq is due for a pullback, and by pullback I mean like 5% drop or something over the next couple months. Let's say you see that the Nasdaq has gone up tremendously, and since it's gone up so much and keeps reaching new highs, maybe you think, it's due. Even with a strong economy, it's due for a pullback. And if that's what you think, right? And so you believe in the bigger picture, it'll pull back more than go up. But you also believe that in the short term, it could go up more. You could be wrong on the exact entry point. And you say to yourself, I don't want a stop loss because I don't want to get out of it if in the short term it goes the wrong way because you believe strongly in this example in the downward position. But you understand it could go the wrong way short term. Okay, so instead of having a stop loss where that takes you out of the position, and then we've all seen it happen. You wake up the next day, your trade closed on the stop loss, and then it went the right way, and you missed the movement. And you say, darn it, I should have had my stop loss further away, or maybe I should have taken a smaller trade so I could have had it further away. So what's the solution? Rather than having a stop loss where you can get stopped out and then it goes the right way, is to put a hedge trade. And so let me walk you through the concept. Let's say this sell stop opens. Okay, this sell stop opens, and we've got a running sell position here, and I'll just make up a position. Let's say it's for a quarter of a lot, 0.25, and it's going downward. So instead of having a stop loss on that position, I could go back, remove the stop loss. I would have put it in the first place so it was covered in the beginning. Once the market position is open, I can then go back up where I would have had my stop loss and put a pending buy stop up here for the same size as my active sell trade. So if I'm selling 0.25 in the market already, and I say, I believe in the bigger picture it'll drop, but I also agree that it might spike up in the short term, and I don't want to close that position if it does that, but I want to cover my risk. If it comes up and hits your buy stop for the same size as your sell position, now if it keeps rising, it's the same as closing it in terms of managing risk other than interest overnight, because you're making the same amount on the buy as you're losing on the sell. That's an example of fully hedging a position. The idea is your buy stop up here, once it activates, let's say this went down, triggered your sell position, it comes back up, you have a buy stop here, it triggers your buy stop. Now if it keeps climbing, you're breaking even. If you believe in the bigger picture down more than up, you put the stop loss on the buy position so that when it finally drops, it hits the stop loss down here on the hedge position, closes the hedge, and now you're still in on the buy. I mean on the sell. Okay? And once, let's say that happens. Let's say the sell position activates. It goes up, hits your hedge position up here, activates it, comes back down, closes your hedge trade. You need to go back up and prepare another buy stop hedge because you're unprotected at that point because you don't have a stop loss on the sell. Okay? So you got to be on it, check it every so often, but I've seen it work very well. Let me give you an example. If your sell position activated, it comes up, hits your buy stop and climbs. Once it reaches the next resistance level, let's say up here, you can close the buy stop, take the profit on the hedge, prepare another hedge trade above the next resistance level, and if it drops, you made that much more profit because you took the profit on the way up, and if it breaks through, you activate another hedge position with another buy stop to cover you. So at different price levels where you see resistance levels up higher, you can profit take on the hedge, all the while believing, which is the whole point of why you got into this, you're believing it's going to drop for that sell position eventually. And now if that sell position is down, I don't know, $5,000, you've taken probably $4,000 in profits from the hedge trades on the way up. Now when it finally drops, even if the sell position finishes negative $2,000, you still made an overall profit because most of the negative on the sell position in this example, you've taken profit from on hedge positions on the way up. Okay? You don't even have to profit take on the hedge though. You can just leave it until it comes back down and closes itself, and now your sell is back in profit. Okay? Type okay if you're with me on that concept of hedging, or I can run through it again. No, the buy stop and sell stop wouldn't be at the same value. The sell stop you were triggering if it broke the support. You're only getting into the buy stop if it goes back above the support a certain distance. Then you're hedging yourself if that's the concept you want to use. So the buy stop enters higher than the sell stop. You in a perfect world, the buy stop would never open. it would never open. In a perfect world, your sell stop opens if that's what you believe in most. You don't have a stop loss on the sell stop, but it keeps going the right way and hits your take profit. You cover yourself with a hedge by if that activates, it comes back up. It can activate a buy stop to cover you in case it keeps going the wrong way, allowing you to wait it out for weeks if you want to without losing any further other than overnight interest. And once it comes down and closes your buy stop, boom, you're making profit again on the sell. And you never had to close it. If you were asleep overnight, whatever, at work, and it came down, closed that buy stop and plunged, you're still in on the sell. That's the whole idea of not putting the stop loss, is to keep that sell position open so it doesn't close itself, then go the right way. And again, I preface this with the idea that you do this with a market move one way or an open move one way. Eventually it opens a pending. Then you go and put the hedge position in the opposite way. Only if you believe strongly in the longer term on the move that's already open compared to what we're calling the hedge trade, which is a temporary cover on risk. Okay. Type okay if you're with me, if everything's clear, or questions if you have them. Yeah, Jen, I have a lot of traders that are thinking like you are, that likely there could be a pullback, and they've already hedged themselves on this, meaning they're in on a market move and they've got the hedge buy stops already prepared above this high point up here. They've got a high point buy stop up here, and they've already done a market sell off of this resistance. I'm not saying you should do that. You get in when you're ready and in the direction you believe in, but the concept is what's important. The concept of how to hedge, what it means, how you'd set it up. And you really need to know which direction will open first and have a position on the market already to know then where to set up your hedge position in the opposite direction. Okay, so if you wanted to wait for one of these breakthroughs, let's say it breaks the support and drops and you enter on a buy stop, then you can go back and prepare or enters on a sell stop, then you could go back and prepare the buy stop, or vice versa. Okay, depending which way it goes first. All right, good question, and also good input. All right, so question is, what's the fundamental news show today? Let's go look at the fundamental news and see what's happening here. The PMI reports. Listen, I don't have any good way to know for sure, Gerard, what the PMI numbers will be, the Purchasing Manager Index numbers. For anyone who doesn't know what that is, there's an economic schedule I'll show you here in a minute that has those types of reports that you know exactly what day and what time and for what country they're coming out. Okay, and that's the type of fundamental news that certainly could move the markets one way or the other and trigger either your buy stop up here or your sell stop down here. Okay. Let's take a look then, some fundamental news. And I just want you to get a feel for what the general direction is in terms of sentiment right now, and then also what you think is going to happen next. So UK inflation holds well below Bank of England target ahead of rates meeting. If UK inflation isn't anywhere near their target, is that good or bad for the strength of the pound? Inflation is much lower than the target. Is that good or bad news for the strength of the pound? This headline. If we were going to look at a chart on Great Britain pound, let's say against the yen. Okay, someone says good, someone says bad. It depends on your perspective, right? A lot of inflation means as a consumer, prices are going up, right? Things are getting more expensive. Not enough inflation means the economy's not doing well. right? And you want enough inflation. You want to reach inflationary targets to know the economy's growing enough, right? You don't want too much inflation because then things cost too much, right? So UK inflation holds well below Bank of England target. If there's not enough inflation, what many times do they do with interest rates? In order to drive more inflation, they might lower interest rates, right? And there's a rate meeting coming up, interest rate decision coming up. So in terms of the strength of the pound, it's bad news. When they say inflation is much lower than expected, and they're talking about rate decisions, rate meetings, in order to stir more inflation, many times nations will lower the interest rate to make money cheaper. And what's that do to the strength of the pound if they lower the interest rate? It tends to weaken it, right? Not every time, not 100% ratio, but lowering interest rates tends to weaken currency most of the time. Even if people think they might lower the interest rate, even if they don't, currencies tend to weaken on that type of thought, okay? So this tends to be bad news for strength of pound, this type of headline. So if we look at a chart on the pound, we want to keep that in mind, okay? What else do we see? Great Britain pound had some announcements today already. What do we get? Core PPI numbers, worse than expected. Core PPI month over month, worse than expected. Actually went negative. Month over month for November, worse than expected. Year over year for November, worse than expected. Output, worse than expected. Year over year and month over month. You get the idea. A lot of negative news here out of Great Britain. There were a couple green ones, better than expected, but a lot more red than positive. So we see a couple reasons why shorting the pound fundamentally, in terms of fundamental news, might make sense today. Okay, a big headline about rate decision and not enough inflation, and a slew of negative announcements here on the pound. So we've got a lot of reason to think the pound could drop today, fundamentally speaking. It doesn't guarantee it, right? No one move is guaranteed. But fundamentally speaking, seems to be bearish pressure. Yeah, Gerard, obviously, if you believe in the bigger picture upside of Great Britain and their economy, then obviously the lower it drops, the better your entry point if you're planning on buying on the pound, right? So if you were planning on buying the pound, you might be patient because it has a lot of reason maybe to pull down today. Okay, short term, maybe shorting the pound fundamentally looks like a good idea. Longer term, Gerard, you think maybe going long on the pound. So depending whether you're a scalper and wanting to get in and out one day or a patient trader that's waiting weeks and months, you could be thinking opposite directions at the same time. You could go long term one direction, short term the other at the same time. Works as a natural hedge and you can profit on both. Okay, good point. So the euro announcements are kind of positive to flat. Black means as expected. The euro announcements came in at least as expected here, and also in the green here. Green, 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 and a couple reds. More towards the positive for the euro, more towards the negative for the pound. So if you're pairing euro pound, if you find a nice resistance point or support level, you take that into mind as to which direction you'd prefer to go with euro pound, knowing there seems to be a little more positive news for the euro and negative news for the pound, fundamentally speaking. Okay? Now, what about the bigger picture? We were looking at the Nasdaq. What about the bigger global environment? World shares hover near record highs as investors pause for breath. Isn't that exactly what we saw on the chart? High points on the Nasdaq. It went rushing up, but it's at a pause. And that's exactly what this headline says. Investors pause for a breath. Look at the chart. Isn't the chart pausing? A big run up, even a gap, and sideways. Investors pause, right? 1 hour candles show it better. Resistance, resistance, resistance. That's the pause that this headline is talking about. Investors take a pause. Okay, so the headlines are confirming what we saw in the chart. They're confirming it. Positive sentiment, but momentum maybe has stalled. Okay, what do we see as a picture on the futures market? Green, but not huge green, up 0.08%. It's not up a lot. The S&P, the Nasdaq, etc. on the futures. Yesterday they went up nicely. Today they are kind of flat, little bit green. The fear index. If those of you don't know what this is, it's good to learn now. The VIX is what people refer to as the fear index. Okay, volatility index. When the volatility index is red, that means fear and volatility is dropping, which means markets tend to be positive. Okay, so it makes sense that all of this is green and the fear index, the volatility index, is dropping. And it's down near 2% today, right? It's down now significantly. So there's still positive feel in the market. So if you're expecting a pullback on the Nasdaq, this is telling you maybe it won't be such a strong pullback just yet, right? That's what the fear index is telling us right now. Fear is dropping. Volatility is still dropping. Okay. And that's a snapshot then of the market. Positive momentum. The size of the momentum is stalled, but still a positive feel in the market. There are a few assets like the Great Britain pound, the euro, that there have been some significant announcements today that might give you an idea of what direction you prefer to trade. Okay, so let's go ahead. Let's go back to the charts. We already worked out a strategy for the Nasdaq. I really like the idea of the breakthroughs, and especially if it breaks through down, maybe potentially hedging on the upside of that if it breaks back upward. Okay, but you certainly can put a stop loss. You can manage it how it makes sense to you. But if we look at, let's say, 1 week candles, look at that climb. Look how many green candles in a row or very small red candles. For how many weeks in a row we went up? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks of climbing, right? You don't see that very often without a pullback eventually, okay? Yeah, good question, Farhana. Go to YouTube, okay? Go to YouTube and just in the search function, search YouTube, or I'm sorry, AvaTrade channel. And it's one of the first ones that come up. Our AvaTrade channel has a folder then, a link on the AvaTrade channel that says English webinars. On the first page you come to, click on English webinars, and you'll see all the recent webinars listed in order of date. Yesterday's is there as well. Monday's is there. You can take a look, see what we talked about on the crypto. Look at what happened this week since Monday. And you'll say, wow, if we had done what we went over in the webinar that day, we all would have made a lot of money. Okay, not everything, there's a caveat, not everything we go over always comes through that well, but the idea is to be right enough to profit. It's never, you never go into investing with the idea of saying, I'm going to be right every time on every move. That'll drive you crazy because you never will be right on every move. You need to be right enough or smart enough with your setup to profit more than you lose, and that's it. That's the idea. A lot of times I like to take the word right out of the vocabulary and replace it with smart. Because in the example we're looking at here, are we trying to guess which way it'll go? No. We said you could put a buy stop here and a sell stop here. That's being smart, not right. That's just acknowledging that I don't know which way it'll go, not for sure. So I'll create an opportunity on the upside and the downside, in case it breaks the support, in case it breaks the resistance, and you get in maybe on a nice move without guessing or trying to be right. You're just being smart with your setup of buy stop, sell stop in this example. Okay. All right, good question. So let's go then and let's take a look at some other assets. Dow Jones, looks similar, doesn't it? A little more choppy, but similar. What I mean is resistance, right? Resistance, resistance. It's going sideways, and the movement is tightening. High points are getting lower. Low points are getting higher. You see that? That's what we call getting pinched. The market is pinching. It's tightening. Lower high points, higher low points. Okay? Low points are getting higher. High points are getting lower. The market's tightening. What has to happen soon? The market is getting pinched. What has to happen? Yeah, exactly. It has to break one way or the other. It can't just keep getting tighter. It's got to break up or break down eventually. Okay? So Nasdaq and Dow Jones set up similar. S&P 500, same thing. It's upward momentum has stalled. We've got a pause, as the one headline said, and things are moving sideways right now. There's either going to be a breakdown or a break up. One or the other has to happen eventually. Be smart. Be ready for either one. Okay? What about gold? Isn't gold doing the same thing? Resistance, support. Okay? Resistance, support. Resistance, support. Resistance. Same idea. It's going to break one way or the other soon. Up or down. One of them's going to happen. Be ready for it. Put some pending orders in the directions that you think this could break. Okay? And you can hedge it the opposite way and be patient. Even if it triggers one of them, goes the wrong way, you can have it hedged and be patient. If you believe in the bigger picture, it'll go one way more than the other. And you're only risking a little bit, the distance from where you enter to the distance back the wrong way to where your hedge position potentially could kick in. That's all you're risking in terms of negative movement on the chart. And for that risk, if you have it hedged, then at that point, you get the benefit of being patient and waiting it out, with the only other risk being interest overnight, which is relatively small. Okay, so gold sets up like the indices. What about oil? Oil's been climbing more than dropping. Oil reached a new high again for the month. Okay, it does look like something here changed, doesn't it? Look what changed. It was high point, rushing up to a high point. Then all of a sudden, a sharp drop. It tried to rise, it dropped. It tried to rise, it dropped. It's trying to rise again, and it hasn't. Okay? So I think the markets are primed for a big movement in oil. Okay? Oil's up above 60. Many believe there's an oversupply of oil on the market. OPEC, again, recently said they would cut production, further cut. That's a true sign that they agree there's oversupply of oil, right? So if there is a pullback on the Nasdaq and on the S&P, what do you think happens to oil? If the Nasdaq and S&P pull back, what do you think oil does? The answer is obvious. What happens typically when markets are dropping and pulling back? What happens to the price of oil? Yeah, typically it goes down. Exactly. No guarantee, right? But that's usually what happens. If there's nervousness in the markets and people think markets are pulling back, then people would assume there's less demand for oil then. If the economies are slowing, and so then oil price tends to drop. And with oil up above 60, and as much as it has climbed recently, there certainly is a large potential, if markets start to pull back, for oil to have a dramatic drop. Okay? Now, obviously, oil could keep climbing. I'm not saying it can, but I'm talking about potential, recent potential. Okay? So you certainly could put a buy stop up here above 60.9, and if it breaks that high point, you could buy, right? Personally, I don't think it's going to go flying above 60.9. but it certainly could. And if you, even if you don't want to try and guess, right? Even if you feel it won't, I still could put a buy stop up here and take it done, right? Because it wasn't that long ago, it was at 63. So I'm not saying it can't though, right? You could prepare for the worst, have a buy stop up here in case you're wrong. And you could prepare if oil price drops back below 60, which seems to be a magic number. Here's the support, support, support. If it drops below 60, below that support, you could be in on a sell. Because likely, if it drops below 60, there was negative news on the market again, and it could keep dropping. There's a potential for that. And really a large potential for a drop if it drops below 60. Any questions? Meshash, I'm sorry if I mispronounce your name. Meshach, what do you mean it will fall? You're saying oil is going to fall? If the markets drop, you're saying oil will fall. You were answering my question from a minute or two ago. I got you. Yeah, exactly. If the markets crash, oil will likely fall. You could prepare for that, not knowing for sure that it will happen, right? None of us are Nostradamus. We can't predict for sure that the markets will drop, but it's about what if. It's about the what ifs and the potential. If the markets drop, then probably oil will drop. And if it breaks below 60, you could get in on a buy stop and likely have high potential for further dropping. Okay? So I refer to this concept that we're going over today with these buy stops and sell stops. I refer to this as putting trip lines in the market. Putting little trip lines in opportunistic spots in the market. Some of them will be tripped, some of them won't. And those that get tripped are at an opportunistic spot that you believe means there's large momentum in that direction. Okay? And so buy stops, sell stops, we've been looking at it this whole session. Huge potential with these, with the way the market sets up this week and going into the end of the year. All right, great. I think this is a good spot to stop. We've been going over 45 minutes. Any last questions before we end things here? Okay, thank you everybody for joining. We had some nice questions, nice input. It's always helpful. If we've got some back and forth to understand what people are thinking and needing to hear. You're welcome, everybody, Farhana and everybody else. I'm glad it's helpful for you. And really the idea here is I want to see you all profiting as much as possible. Yeah, listen, today's webinar, because it's earlier in the day, Monday's webinar is later, so it's usually not uploaded till the next day. Today's webinar within a couple hours should be on the YouTube channel. Okay, certainly by this evening, but even sometime this afternoon, within 2-3 hours, it should be on the YouTube channel ready to watch. Okay, there's another person in our media department that does it. I don't do it myself, or else I would do it right away. But I'm relying on someone. Typically within a couple hours, it's uploaded. Okay. All right, great. Thank you, everybody. Happy holidays moving forward here through the next week or two. Happy New Year to everyone as it comes in. If you're not in the webinars next week, and good luck with your trading. Bye for now.